Well, consumer prices and confidence rose in July, but there's still concern about where the U.S. economy is headed. In an op-ed in today's Wall Street Journal, Michael Darda asks, are we headed for a lost economic decade similar to Japan in the 1990s? He seems to say no, but there are some caveats here. Darda is the chief economist and chief market strategist at MKM Partners. He's joining us now from Stamford, Connecticut. So, Mike, you know, a lot of it has been made about whether we are similar to Japan or not. Before we get into what we can do to address some of the economic problems, let's talk about Japan, because so much has been made of this. I mean, what are the key similarities and the key differences to our situation now and their situation then?
Well, I think the key similarities are Japan had a huge real estate bubble. They had an equity bubble simultaneously. Ours were at least staggered. Those bubbles burst and the banking system came under a lot of pressure, and Japan stagnated for a decade. Really longer than that. It's been 2 lost decades for Japan now. So at least on the monetary policy side, policymakers there were not as aggressive as the Bernanke Fed has been, but they also had a lot of stop-and-go fiscal policy where stimulus packages would be brought online and then taken offline, taxes would fall and then go up. And I think that kind of thing creates a lot of uncertainty and really doesn't help to build confidence over time. So, you know, I understand politicians are grappling with these competing interests, how to support the economy over the short term, but have, you know, fiscal integrity over the long term. But I just think it would be better to have policy stability and go for reform instead of this debate about tax rates going up on which sectors or which individuals. And instead, I mentioned a bipartisan bill that's fairly modest. It is bipartisan, so I'm not, making a partisan argument for sweeping change here, but I think it's a lot better than the current environment. I think it would help confidence. It's not going to solve every problem. But at the end of the day, I think it's better to pursue that track than the stop-go stuff. One good example of very bad fiscal policy, it's bipartisan, so Republicans and Democrats are both responsible for it, was this goofy homebuyer tax credit, which pulled sales forward. Then we had a big hangover effect. It was extended. The same thing happened. So no one knows what the heck the state of the housing market is. We've got to get away from this kind of fiscal policy.
Now, it's interesting because I've talked to some folks in the past couple of days who have said, especially after the Fed's announcement earlier this week, that both the Fed and policymakers should take a very hands-off approach. And that, kind of just leave well enough alone with the economy and let it take its course and probably maybe dip further and then recover. What would be your thinking on that?
Well, the Fed certainly hasn't had a hands-off approach. I mean, they've been very aggressive in expanding the balance sheet. Now, that has not led to a big explosion in broad money growth or a lot of bank lending because you still have financial institutions capital constrained. They're concerned about the changing of the rules in terms of financial regulation. And households are still debt and savings constrained. So that will right itself, but it's not going to right itself overnight. So the Fed, I think, has acted appropriately, but there's even a limit to what the Fed can do here. On the fiscal policy side, I just think let's go for stability. In policy, let's go for growth that can be done in a bipartisan way. None of this is going to ramp growth up next quarter, but in terms of having good growth over the next 10 years, that's really what we should be focused on.
Well, the bipartisan bill that you're talking about, let's get into that a little bit. It's called the Wyden-GREGG Tax Reform Bill. As you talk about in your piece today, it would simplify the tax code. So essentially, this would replace what's going on with the expiration of the Bush tax cuts?
Yeah. So I guess the idea here, the reason that I brought this up and advocated it in the piece is sort of, this is more creative than just having the same old Washington debate about tax rates going up and who they should go up on. Instead of that debate, why don't we just transition to a new tax code that is simpler, fairer, flatter? It's still progressive, and this is, a modest reform, but it would sure beat what we have today. And the bill also includes a corporate tax rate reduction, but in exchange for a closing of loopholes, so it's revenue neutral. And I just think this is a much better approach than what we have going on in Washington, D.C. today.
So it would be revenue neutral in terms of, because the loopholes would be closed,
yes,
that would then make up for, so wouldn't add to the deficits then, which is obviously a hot topic in Washington right now.
Exactly.
But what about the argument that's been advocated by some that at least at the very highest tax brackets that you do need to get some tax increases in place, or at least reverse the tax cuts that were already in place?
Well, even on a static basis, it doesn't really account for a whole lot of revenue, meaning if you look at the breakdown, most of the revenue loss, say over a decade from extending the 03 and 01 tax cuts, comes from the middle class tax cuts, not from the top end. But obviously it's not politically feasible to be raising taxes on the middle class in this environment. So if the rates do go up, it is going to happen on the high end. I just think in general it's better not to be raising the rates, better to get rid of the loopholes. If we're going to have to do something on the high end, I'd rather see the deductions go away versus the marginal rates go up.
And what about the question of stimulus, Mike? I mean, this is something that some have advocated, that as you drew the parallel with what happened in Japan, also we can draw the parallel, of course, with the Depression here in the U.S. There was sort of that stop and start. So do you think more stimulus also needs to be put online?
I think at this point it would be better for us just to know what the rules of the game are. No more temporary fiscal measures, whether that's tax policy or spending policy. Obviously, we do have ongoing temporary measures with jobless benefits and things like that. I'm not going to advocate against that, but I think we've got to get the tax code in better shape in this country. And then on the demand side, I'm more of a believer that the Federal Reserve is the ultimate arbiter of that, and being that they're the only institution that can actually print money out of thin air. So if the deflation stuff becomes a bigger risk and the Fed is led to do a lot more in terms of expanding its balance sheet, then that's probably a more appropriate course than another $800 billion spending package, in my view.
All right, Mike, adding your voice to the hot debate that is now going on about what to do about taxes. And we have till the end of the year to find out what is going to happen. Mike, thanks a lot. Appreciate it. Mike Darda of MKM.